Could silver be ready to resume its sideways trading habits? If you think so, then you'll like today's Cherry Bomb. Hi everybody, my name is Neil and it is May 28th, 2020, and it's time for our Cherry Bomb trade, which involves SLV, the ETF that tracks silver today. And the suggested trade is going to be a strangle. So let's build that out. Now I know not all of my viewers, subscribers here are trading in a margin account. Some of you trade for real, some of you trade simulated trading along with me. I like all of that, but of course I'm recommending that you follow along in a simulated trading account so we can put our theories to the test. So I want to address that today because one of my regular viewers I know is trading in an IRA, so I want to take a look at that stuff. So over here in the July 2nd weeklies with 35 days left to expiration, what I'm going to do is put on that strangle and show you what that looks like. Over here at the 15 put, and we are going to right click that and choose analyze sell trade and choose, of course if you're not careful in the slightest it will move away from you. Strangle. All right, and we want the call to be 17.5. So that's a 15 short put and a 17.5 short call, looking at around 41 cent credit, $41. And we'll take a look at that risk profile right now here. So we're going to set that to July 2nd if yours isn't already. Click on that calendar. And then I'm going to choose to set the price slices to break even at expiration. And we can see here that we're looking at some pretty good probability here. 67% probability of at least breaking even here. You see how much of this light gray area, which is that sort of expected move, right, is inside of this, right? So that's pretty good. That's pretty confidence inspiring. What's not confidence inspiring for those that are trading in an IRA and whatnot is, of course, you may not be approved to do a short call like this. You might have to have a long call to protect yourself to make this, I guess, what the Tasty Trade would call a jade lizard, right? We could explore that if you'd like. So this might be something that you don't like. And also the fact that your risk is infinite. You could sort of infinite over this side. It could go to zero. It is infinite to the right side if silver should just, man, you know, skyrocket. All right. With that said, let us right click this trade and do confirm and send. Review our max profit of 41 bucks. Our total loss possibility is infinite, and that's the scary part right there, right? But probabilistically, that's not something that's likely to happen, that you take an infinite loss. There are some rules that you can follow. You can set alerts, which I've covered videos on how to set alerts. So anyway, moving on, I'm going to hit send. That's going to put this into my monitor tab for my margin account here, where we see that we have that as a working order. Now, bonus, if you're looking to try in trade this in an IRA, remember, in your simulated trading account, you have this margin account and you have an IRA account, which I have never used, hopefully, until today. I want to do this. For my friend here that's trading in an IRA, or my friends out there that are trading in an IRA. So I want to go back to the add simulated trade. I'm in the IRA. I'm still in silver. What can we do to make this a more IRA friendly trade, right? So what we know here is that you can't just sell a naked call, most likely, unless you're at Tasty Works and you're approved for it because your account size is big enough. What you could do is just sell the naked put, right? You could sell that put by itself. Let's take a look at what that would look like. Risk profile here, and set the slices to break even. We're looking, if you sell a 15 put, like we did before in this trade here, a maximum profit of $18, not all that amazing. Can't say I suggest that one, right? But the probability of collecting that credit is near or breaking even, I should say, is 78%. That's pretty good, right? So that may not be the best option for you because it's kind of a low credit. So we go back to add simulated trade. I'm going to delete this one here. If we took this put and we said, look, we need to collect more than, 19 cents if we were in the mid price, right? We can go up, collect more credit, but then of course our probabilities will go down. Another option, if you don't want to just do a naked put, is we could try to shoot for a Jade Lizard type of situation here, where the credit that you collect on the put here, which in this case, 16, looks like you could get about 50 cents, and we have 50-cent wide strikes, means you could do a call spread at the top here and have no risk at all on the call side. So whatever you collect on this call spread will improve what you're getting on this put, right? Let's take a look at it. Show you how to set this up. So I'm going to show you how to do that right now. We're going to click on this bid here for the put. Let's say we're going to sell this 16 put. Then I'm going to hold my control key down and I'm going to come over to this 17 call with the control key held down. I'm going to click on the bid for the 17 and then the ask for the 17.5. So you can see here I'm building a custom trade here with a credit of 65 cents. If I head up to this risk profile here, you're going to see this, what looks like it's sort of like an iron condor strangle situation here. It's what the tasty trade people call their Jade Lizard, right? So up here, I'm going to go to set slices to break even at expiration. And we're looking at a 33% probability that this is going to go bad for us, right? Where the 66, or let's round up to 67% probability that this is going to be okay for us, right? If we really want to see, look, there's no risk to the upside. At, our worst situation to the upside is we're going to collect 16 bucks, right? Kind of like almost that naked put that we were looking at. If things end up in this range at expiration, we're collecting $66, right? 66 cents a share. That's not too bad, but what's our probability of getting that? Probably not too good, right? But with the fact that you can collect 66 possible dollars or 16, right? This might be a trade that you could try inside of your IRA. So that's why we're kind of playing with this. I'm going to add another price slice here just so you can see the probability. And it looks like it's sort of breaking down right there at that area. Okay, that's a roughly 40% chance that you're going to be collecting, your maximum credit on that one. Not maximum credit, I should say, that you end up in this range here, right? If you really wanted to see the maximum credit, it would be something like that, 20% chance. So I just wanted to give you an idea of a trade that you could do, a way to modify this trade to make it something you could do inside of your IRA. You know what? I've never done it before here in this simulated trading. I'm going to do it. I'm going to right click. I'm going to choose confirm and send. My max profit is 65. My max loss, of course, is the 1,500 bucks here. I wouldn't be all that, sad if I ended up being long silver, right? So I'm okay with this trade. I'm going to hit confirm and send and the send button. That throws it over into my working orders here. And thank you for joining me for this cherry bomb trade. I hope you liked the little bonus today. Let me know what you think about this in the comments. Just kind of played with it on the fly here. I look forward to seeing you in tomorrow's cherry bomb.